Thank you so much, Kevin, for being here on the podcast. How are you today?
Good. How are you, Andrea?
I'm doing great. I am super excited to have you on and talk about taxes and write-ups and how to do this thing as a model. I know this can be a very challenging subject, especially for a new model, because you know there's no school for modeling. Nobody teaches how to do this thing, and it can be very scary because of taxes and the IRS, and you don't want to do things wrong. So I'm really excited to have you on. But first of all, can you talk us a little bit about yourself, about your background in this career?
Yeah, sure. First of all, thank you for having me on here. I think it's great what you're doing. Spreading the word, educating all your fellow models out there. I think that's really cool. And yeah, this one subject, I know taxes can be a little bit boring, but I'll try to make it fun as much as possible. So my background is in accounting. I graduated from University of Maryland in 2014. Fast forward 7 years, I've been in public and private companies. And earlier this year, I got my CPA license in Maryland. And this past tax season, started my own tax firm, which is great. It's called Spark Tax Services. Yeah.
Awesome. Congratulations. So that's super exciting. So to start talking about, get right into it and start talking about, taxes and stuff. A lot of people don't know, but models are not employees of an agency. So when you sign to an agency and you're working with them, you are not working as somebody with a regular 9 to 5 is working with a company. You are hired as an independent contractor, and that usually means that at the end of the year for your taxes, you're going to get a 1099. So I believe that people who have more like a regular job that are employees of a company, they get a W-2. Can you explain the differences between a W-2 and a 1099?
Yeah, sure. Great question. So W-2 is pretty much you work for someone else. So you work for a company who's your employer. And what they do is, let's use an example. So Sally makes $50,000 a year, right? That's her salary. So you get paid bi-weekly. So that $50,000 is divided by, let's say, 26 pay periods. From the paycheck that you get, which is your gross pay, your employer would take out all the taxes necessary, retirement contributions, healthcare expenses, all of that right away before you even get to touch your money. And then after that gets your net pay. And then with that money, you could do whatever you want, pay your rent, utilities, whatever. Yeah. And versus a 1099, you get money based off projects that you complete, and once you receive a check for $500 of a photo shoot, you don't have to pay taxes right away, which is awesome. Yeah. So you pretty much just pay taxes at the end of the year, based off, when you do your tax return. And there's something called quarterly estimated payments that you can do every quarter. So there's not that big of a tax bill at the end of the year as a 1099. That's what some people do as well.
Okay, great. So the next question following that is, and I get that a lot, is people ask me how I do my taxes and why do I recommend in terms of a sole proprietor or like an LLC. People are usually saying I'm about to start modeling, so I'm already going to do like an LLC. Like, what do you think about that? And as a person who doesn't have a lot of knowledge in taxes, it's really hard for me to answer that question because, it's hard. It's just hard. I don't have the knowledge for that. I just don't. Yep. So as a 1099, I do know you have a few options of how to do your taxes. Can you tell us what are those options and what would you recommend as a model? Like what do you think we should be doing?
Yeah, no, that's definitely a loaded question. So I'll try to break down.
So you don't have to go into details, just, like a brief explanation of, what it is. What are we working with? Yeah,
so there's 4 different types that you can consider yourself. So there's a self-proprietor. There's you could be an LLC, an S Corp, or a C Corp. I would immediately eliminate the last one because we're talking about models. Okay. And I don't think it really applies. So for a self-proprietor and an LLC, there's no tax savings for either one.
Okay.
the main difference between the two is that an LLC protects all of your personal assets. So it protects you from you, meaning that if your business gets sued or your LLC gets sued, all of your personal assets are protected. So your home that you live in, that you own, your car, all the other personal assets that you may own. So that's the main reason why you would want an LLC, to get that, that barrier between you and your business. Versus a sole proprietor, I mean, you just make a sale, you're a sole proprietor, right? Okay. It's simple, affordable, there's minimal cost to it. Whereas as an LLC, there is some sort of admin cost. But again, for both of them, there's no tax savings.
Okay.
For business structuring, the one I really want to touch on for models is the S Corp. The S Corp really opens up all these opportunities for you to save a lot of money.
Okay.
So there's something called self-employment tax. So self-employment tax is Medicare and Social Security taxes that you pay.
Okay.
Going back to the first thing we talked about, W-2, that's something that you pay right away, right? As an employee, they take that out of your paycheck before you even get to touch your money. Versus in an S Corp, you get a payroll as well. You get a reasonable salary. You have to pay yourself a reasonable salary, where you pay the self-employment tax, but you also get a distribution of your net profits. And in that net profits, you don't have to pay self-employment tax. So let me kind of simplify what I just said and break it down a little bit. So let's say I'm going to use this example really quick. We'll use Sally.
Okay, go Sally. She's a great model.
Yeah. So Sally is in between being a sole proprietor and an S Corp, right? Sally made $100,000 this year. Let's say $100,000. And I'm going to talk about sole proprietor first.
Okay.
So that's her income. And then she incurred $30,000 in expenses. So she profited $70,000 for the year, right? Because it's your income minus expenses and then your net profit. So as a sole proprietor, you have to pay self-employment tax, which is 15.3%.
Okay.
So $70,000 times 15.3% is around $10,700. That's a big chunk of change.
Yeah.
Versus an S Corp. Same facts. $100,000 Sally makes, $30,000 of expenses. She profits $70,000 for the year. And there's two things you have to do, right? You have to pay yourself a reasonable salary, and then the remaining profits are distributions. For this example, Sally pays herself, let's say, $35,000 of a reasonable salary. So for the $35,000 of the salary portion, you do have to pay self-employment tax.
Okay.
So it's 15.3% of $35,000. That's around, let's say, $5,000, just estimating.
Yeah.
The remaining $35,000 is treated as a distribution. The former is called a K-1 distribution. And here, you pay $0 in self-employment tax. So I just drew this up really quick. As a self-proprietor, just to recap, you pay $10,700 versus an S Corp, you only pay $5,000 in self-employment taxes.
Yeah.
So that's, a little bit over $5,000 in savings.
Yes.
Now, I don't know about you, but I like to pay the least amount of taxes as possible.
Yeah, no. So, I know that there is a cost to establish an LLC. It's not that much, I believe, but is there a cost to do this, the S Corp?
Yeah, no, that's a great question. So for an S Corp, there is some admin costs associated to it. So for example, you have to set up payroll to set up your reasonable salary, get that going. You have to do a separate tax return. So using this example, let's assume the admin costs with the payroll and separate tax return, and then setting up in your state, all those costs accumulate to, let's say, $1,500.
Okay.
So you do 5,000 minus the 1,500, that's $3,500. So you're still saving money.
Yeah. And that's considered a write-off, right? That expense?
This is tax strategy.
Okay. But that expense that you're taking from the 5K,
yes. The payroll expense and the separate tax return, yes, 100% write-off.
Okay, great.
Great point. Yeah.
Okay, amazing. So now I want to jump into the write-offs topic because I think it's so interesting and very exciting for a self-employer. So just to start, if anybody doesn't know, can you explain just simple what a write-off is?
Yeah, and really quick, I just want to add a disclaimer for the S Corp.
Yeah.
It only makes sense if you profit at least $40,000 and above.
Got it. Okay. So if you are a new model, new models usually don't make that much money. You're starting off very slow. Mm-hmm. So probably for a new model, it doesn't really make sense to go into the S Corp route. It's better if just to stay as a sole proprietor, not even an LLC then, right? Because from what I know, it's not that common to get sued as a model.
Yeah.
So I guess it would be a good idea just to stay as a sole proprietor. And for that, you don't have to do anything. Like you're just you and you just, submit your taxes and do your stuff, but you don't have to do anything extra, right?
Yep. And it's like a graduation level, right? You start as sole prop, you move to LLC, then S Corp. But for models, I would start as sole prop. And then once you start making, some good money, your career is going, I would advise talk to a tax professional to see if it's time to graduate to the S Corp.
Nice. Okay.
Yeah.
Awesome. So now going back to the write-offs, just to explain a little bit, what it is.
Yeah. So a write-off is a business purpose expense that you can reduce your taxable income by.
Perfect. So going off that, just to I usually tell people new models, like if you want to make money modeling, you have to spend money. It's because it's not as simple as it look on social media. It's not like you sign to an agency and that's it. Like you made it. Like you start booking work and you're flying places and you're making a ton of money and booking all these campaigns and you're done. It's not that simple for the majority of people, or even the really good models are making their career really successful really soon. You have expenses regardless.
Yeah.
So for example, if you sign to a new agency and you don't have a portfolio and you want to start booking work, you need to pay for a portfolio, and that could be a few $100. Then you might need clothes for that photo shoot, so you need to go buy the clothes. Then if you do get booked for a really good client, that client might not have a makeup artist on set, so you have to do your own makeup. So you have to have good makeup.
Wow. That's a lot.
Yeah. So another example, I went to Ohio for a photo shoot, and they were giving me some money for traveling, but I still had to put some money of my own to cover the expense of the traveling there, Okay. And to me, the job was super worth it, and it paid really well that I could totally do that expense. But I think a lot of models, that's a very common question. People ask me when I'm traveling, is the client paying for you? Is the client paying for your your traveling expense? And sometimes yes, other times no. It comes from my pocket. And I think that could seem unattractive for aspiring models because they think everything is paid for and you're just sitting there looking pretty. And it's not like that because it is a business. So I really want to talk about write-offs so you can explain how this can work in their favor, how expenses can work in your favor. So can you explain the most common write-offs as a model?
Yeah, so this is going to be, we can go down. I like to break it down into 6 categories. And I call this the big 6.
Okay.
So a part of the big 6, we have travel, auto, meals, technology, the home office deduction, and supplies and materials.
Okay, great.
Now just stay with me. Let's. I think the best way to do it is just kind of break it down one by one.
Okay.
Does that work?
Yeah, that's perfect.
Okay, perfect. So sticking with travel. So before going into what can you write off with travel, let's start off with the question of when to write off for travel.
Okay.
So you travel to Ohio. Perfect example. You're headed to do a photo shoot. That's an ideal time to write off for travel.
Yeah.
When you're meeting a photographer, a videographer, when you're going to meet, you're meeting different agencies, affiliates and partnerships. If there's a modeling conference, you could do, that's a perfectly reasonable business example of going to write off travel.
Yeah. I'm going to a casting, for example.
Going to a casting. Yeah. All those reasons are ideal of when to write off. Now, remember, these are not vacations. They're business trips. It's very important that people, differentiate the two, because I'll just book a photo shoot in LA and stay there for 3 weeks. Whatever the portion of that is business, you can write off.
Okay.
The other days that are personal, you cannot. It's important to know. And I'll talk about details of what to write off in a bit. When you're traveling, it's very important that you keep notes.
Okay.
When I travel for business, I typically just use my notes app on my phone.
Okay.
On my iPhone, that syncs to my MacBook. For my MacBook, I can just, after the business conference, when I have downtime, I can copy it into a more formal document that I save in Google Drive.
Okay.
So it's important to take good notes.
Okay.
And also, what qualifies for a business day is you have to have at least 4 hours of activity of business.
Okay.
That you were doing some sort of type of business. So headed to a photo shoot in Ohio makes perfect sense. Also, if, for example, Andrea wanted to travel to Los Angeles today to meet Kendall Jenner, and if you guys go to Starbucks, located at 123 Hollywood Boulevard, to discuss triangles and posing. That's how detailed you got to be in your notes.
Oh, okay.
Quick example. Yeah.
Okay.
Between 8 to 12. Yeah, we talked. We did this. That's an ideal for documentation.
Oh, okay. I see. So it has to be very detailed, like where you're saying
you want your notes.
Oh, okay.
Yeah.
Okay.
And the reason why, I just want to be ready, in case IRS comes knocking.
Oh my god. Okay, so that works for traveling. That makes sense. I believe, so that's one to run. Yeah. So I believe that you can go, in terms of your car, I believe that you can go either your miles or gas, right? That's you have to choose one to write off. You cannot write off both. Right.
Yeah, that's auto expense. So that's my number 2. That's my big number
sorry.
2. No, it's fine.
Put them together.
So, no worries. So sticking with the travel.
Yeah.
So we talked about when to write off. Now, what to write off?
Yes.
Let's break that down a little bit. So I love to travel for business. Why? Because a lot of things are 100% a write-off. Other things could be 50% or a percentage or not a write-off at all. But for the majority, 100%. So for example, you travel to Ohio. Let's use that for example.
Yeah.
Your airfare, 100% write-off. Your hotel or your Airbnb, 100% write-off. Your Uber or taxi that you use, 100% write-off. Gas for the rental car, your baggage fees, your valet, your parking, tips for the valet, tolls that you pay, the train that you use, metro, ferry, all of that 100% tax write-off.
Nice.
Which is it almost feels like you're traveling for free.
Yeah.
Because you have to be there regardless for your job, right?
Exactly. Yeah.
So I think it's pretty sweet.
Yeah.
Another thing that you could write off for travel is also meals. So for the years 2021 and 2022, you are allowed to write off 100% of your meals when you travel.
Okay.
As long as it's takeout or at a restaurant.
Okay.
And just want to say that even if you're eating by yourself at the airport, waiting for your flight, that still counts. You don't have to be eating with somebody. You can still eat, by yourself.
Doesn't need to be a beat meeting that you're doing every single meal
Correct.
to write it off. You could.
If you're traveling, yes.
Yeah.
If you're traveling, all your meals are 100%.
Amazing.
write-off.
Yeah, great. So I actually have an example for you. That's not like flying. It's like, for example, when I go to like shoots in like Philly or New Jersey, like I am going like on the highway, and let's say that I am done working at like 5 p.m. and then I'm traveling back home, and on the way back I get hungry, so I stop and I eat, Burger King. So I can write off that Burger King meal, that
Absolutely.
dinner.
Yes, absolutely.
Because I'm on my way from work or going to work. Or like
Correct.
in the morning, I feel sleepy and I want to get coffee on my way to Philly. I can write off that Starbucks $5 coffee.
Go for it.
Okay.
Yeah.
Great. Awesome.
You need it, right? To be energized to start your day.
Yeah, exactly.
Yeah. Again, I'm going to be saying this probably multiple times throughout this interview, but receipts. Keep all of your receipts. It's so, so important. Like, yes, there's so much we can do for tax write-offs, but you need to keep your receipts. Now, it doesn't have, you could do physical copies, but you can also do electronic. I do electronic because I don't like to carry so much paper. So you could just snap it on your phone and keep it electronic copy as long as it's very clear and you can obviously read it. Don't make sure it's not blurry.
Okay.
That's a quick tip. And I'll probably keep saying receipts for and also other days that you're on your trip. For example, let's say you go to Ohio on a Thursday, right? And you travel back Sunday, and you're working Thursday, Friday, and part of Saturday. And then once you're done working, you want to go, do some personal stuff. You want to enjoy while you're there.
Okay.
It's important to know that you cannot write off clubbing, sports games, or if you want to go like snorkeling or like Six Flags. Unfortunately, that's considered personal. You can't write that off.
Okay.
I know.
But I do have, though, a slight thing that potentially I believe that somebody could write it off. And it's tied with the whole like being a model. Like most models are also influencers. So they're also very active on social media. So it's common for me, for example, that I document my flight, my trip. So because I'm putting it on YouTube, for example. So I go to Ohio for this job and I do the job. But at the same time, I am documenting, I'm vlogging my entire trip. So like when I get to the airport and then when I get to Ohio and then what I'm eating and what I'm doing. And then after I do my job and I want to go to Six Flags in Ohio. They probably don't have Six Flags, but let's say I go to Six Flags in Ohio and I document that I went there and
you vlog there?
And I blog. And then I finish my trip, I go back home, I edit the video and I put it out on YouTube. Because YouTube pays me to put videos on there, I can write off my trip to Six Flags, right?
So that's a great question. I love that you gave that question because you're already starting to think of like, what else can I write off, right?
Yeah.
So that's something I have to think about a little bit more.
Okay.
Because I know vlogging's still, in the eyes of the IRS, is still kind of new, right? So vlogging. But I mean, let's think it through. So you're using your camera, you're vlogging yourself. You're going to post it out. I
mean, it's my job, It's my
job
to be an influencer and to put my life out there.
Yeah.
So.
Yeah. It's a gray area. Yeah. We can go either way on that one. But I have to think about that a little bit.
Okay. The reason why I'm putting it out there is because I don't know if you know this guy, Ryan Pineda. He's like a millionaire and he has a big channel on YouTube. And he puts his CPA on it all the time. And they talk about taxes and write-off. And I started really thinking about all of this stuff until I started watching him and his CPA talk about it. And they really, helped you understand more, because like you said, social media and, influencer is a very new job. So there's not a lot of information on that. But they did talk about it, like the example that I gave you. And according to his CPA, you can totally write it off because you're working.
Yeah. You are working. Yeah. It's I mean, it can go either way. I can see it. And at the end of the day, you have to be comfortable with what's on your tax return, right?
Yeah.
Because at the end of the day, you're the one signing off on it. So if you are able to explain why to the IRS very clearly, very documented, you're kind of pushing me into that territory. I mean, you have a vlog video, you have a YouTube income. Yeah, let's write that off.
Yeah, I mean, I can see how a lot of YouTubers and like TikTokers do that. You know, they travel and they document the entire journey, what they ate, where they went, where the outfits they bought, everything. And I mean, that's, you know, creating content is a job, you know, and you do get paid for it. So it's a write-off. But yeah,
it's it's so new. The space is so new.
Yeah, it is very new. Yeah, but that's why I wanted to, you know, like kind of like ask you more about it, because I do see that CPA talk about it a lot, and it's very helpful because it's so new. But it's like
I'm sure. Yeah, I'm sure the kid Ryan, what's his name?
Ryan Pineda.
So I'm thinking the little kid on the YouTube, was it like Ryan's World?
I don't know.
Sorry, I have a 5-year-old son, so like, he watches Ryan's World.
Oh, okay.
But like he goes with his families to all these theme parks, or you know, around the world.
Oh, okay. So that's, you know,
so
he's
that's a
writing
perfect
all
example
of
of vlogging.
Yeah,
yep.
yeah, writing all of those trips, having fun. That's awesome.
Yeah. So what you said makes sense.
Yeah. So going back to your big 6, I think we already covered 2, like the travel and the meals. And then I think we can go to auto expenses.
Yeah. So we talked, travel, meals. So auto expenses. There's 2 different types of methods that you were on the right track earlier. So you have mileage and actual. So those are the two ways you can write off auto expenses. So for mileage, the way it's calculated is the IRS sets a certain amount of rate. So for year 2021, it's 56 cents. It's a fixed rate. And pretty much that's tax deductible for every mile that you drive. That's outside of your normal commute. So if you are driving here and there for different photo shoots, and that's outside of your normal commute to the office, that's a write-off.
Okay.
And it's 56 cents per mile. So what you do is just track the mileage for the whole entire year. And let's say 10,000, you drove 10,000 miles related to your business, multiply that by 56 cents. That's, you know, what, $5,600 that you can write off?
Yeah.
And versus actual. Actual is all the actual expenses that are incurred on your car. So maintenance, like for oil change, tires, your car insurance, lease payments, repairs, gas, even depreciation, which is pretty much like the value of the car, the wear and tear over the value. Over the life of the car. So what you do is you total that up at the end of the year, all the actual expenses you incurred for your car, and you take the percentage of what you actually used it for business over the total use of the car. So if you used your personal car 20% of the time for business, and all of your actual expenses totaled up to $10,000, you could write off $2,000.
Got it. Okay, so it's not everything. It's just a percentage of what you use for your business that you can write off.
Of the car. Yeah, of the car. So mileage makes sense when you drive a lot. Versus actual is the other method, I guess. But it's more commonly used to use actual, I believe. I think you have the better benefit there. I don't know. Do models drive a lot?
I mean, I drive a lot.
Oh, you do?
Yeah.
Okay.
Like every single week I am going to like Philly or New Jersey.
Wow.
Or,
okay.
You know, DC. So I guess it makes sense for me if I'm driving a lot, like to other states to do mileage. So if I do mileage, I cannot deduct oil change and tires and those stuff.
That's correct. It's one or the other.
Got it. Okay, great. All right, let's move on to the other write-off, which I think it's going to be technology.
Correct. Yeah. So this is where I love this topic. This is one of my favorite write-offs thus far. Who doesn't love tech? So, thinking about the model in the fashion realm, I'm going to think of a few examples, and you can add on to the list as well. But majority of these things of technology is 100% write-off.
Okay.
So again, a write-off, reduces your taxable income that you owe to the IRS. The tax liability that you owe to the IRS. So cameras, the one that I'm using now, the one that you're using right now, tax write-off. Lenses, tax write-off. Lighting, studio equipment that you're using, write-off. Microphones, GoPros, the laptops that we're using, any computer equipment, monitors, tablets, keyboards, mouses, iPads, Apple Watches, editing software that you might need.
The earphones
for your pictures.
AirPods.
AirPods. Great point. And sewing machines. I'm not sure if you you need to sew your clothes.
Yeah,
or,
I guess some models are skilled
it.
in that. Yeah. Yeah. I'm not.
All of that technology, you can. It's 100% write off. It's things that you need to perform the business, right? To perform your service.
Yeah.
As a model / influencer.
Yeah, 100%. Yeah, that's awesome. So
yeah,
I love it because it's true. Like you need all of these things, and they can be pricey, So it's really cool that you are able to allow yourself to upgrade the quality of your work and be able to write off from your taxes. So that's cool.
I'm aware that I think if you go to your Instagram, click your link. One of them is the equipment that you use.
Yeah.
All that. If your viewers go there, they can buy that, and it's 100% write off.
Yeah.
The Sony camera, I think, is on there, right?
Yeah.
Yep, 100% write off.
Yeah. And people were because somebody asked me how much it was, and I was like, oh, it's the one I have that I'm using right now is $800, which compared to a really pro camera, it's not super expensive, but I can understand how it really sounds very expensive, but it's 100% write-off,
Yeah, you got to change the mindset. It's a mindset change.
It's more like an investment, than an expense.
Yes.
It is an expense, but it's when you do it the right way, it's more of an investment.
Right. Nope, you said it best.
Amazing. All right, so the next one, I believe it's going to be the home deduction, so the home office.
Yes.
Can you explain to us a little bit about that? So just to set up the setting. Models, we do a lot of self-tapes and take photos that are called digitals, which are photos that clients ask to see what you currently look like. And then you're a lot on your computer, because you're submitting, you're replying to emails. So how does that work for a model? Let's say, you're paying rent for an apartment and you have to do all this stuff when you're home.
Yeah, no, that's a great point. So home office deduction is very, very cool. Anyone that's self-employed, you better be having home office deduction on your tax return. If not, you maybe need to find a new account, because home office, like you said, there's so much going on within your home, and the space that you're using. We talked about the equipment that you can use, the cameras and all that, but also the space, the square footage. You can use that to write off on your taxes. There is a calculation that's done, so I would advise a tax professional. But to break it down, there's two ways to do the home office. So the first one's called the simplified method. So the simplified method is pretty much $1,500, which is $5 a square feet times 300 square feet, which is the maximum that you can write off in the simplified method. And 5 times 300 is $1,500 tax deduction.
Okay.
Now the regular is kind of similar to how we talked about the actual expenses for auto. So you have to tally up all the expenses of your home. Just quickly thinking, you have utilities, your mortgage interest, if you own your home, insurance, repairs done to the home office, your internet, all of that would be tallied up as a total, and then you take up the percentage of what your home office is over the entire square footage of your home. So let's say your home office that you're using now is 400 square feet, and the entire apartment that you have is 1,600. So 400 divided by 1,600 is 25%.
Okay.
So you take the 25%, multiply it all the actual expenses, and that's your tax write-off.
Nice.
Yeah.
Okay. And now the last one would be supplies and materials.
Yeah.
So that one, I think it opens a whole new world for models because, like I said, when you are doing a photo shoot, even if it's a big client, you might have to do your own hair and makeup. So that means, eyeshadow and blush and brushes, and then you have to do your own hair. So that's like a hair product and like blow dryers. And then sometimes you have to, for castings, you have to wear a specific like outfit. So you have to buy, the jeans and the shoes and the shirt. And then if you're doing a photo shoot for your portfolio, you have to get the outfits, the jacket, whatever like they want you to do. So there's a lot that you have to spend.
Yeah.
But you can write all of that off.
Yeah. You sure can.
And is that okay? So my question is that 100% tax deductible, tax write-off?
Absolutely.
Yeah.
Absolutely. So any supplies and materials that are necessary to run your business, or AKA be a model, 100% write-off.
Amazing.
So you touched on makeup. So makeup palettes, even your skincare products, hair care, because you have to, of course, for your pictures, salon appointments. We're talking about manicures, pedicures, waxes, your dry cleaning, your clothes, alterations and repairs. If you don't have the sewing machine,
I don't have the sewing machine.
Alterations and repairs, you could, that's still considered a tax write-off. You touched on clothes. So wardrobe that's specific for your casting and shoots, 100% write-off. Marketing materials, as you mentioned, so your portfolio, all the paper, the printer, all the folder, everything that you may need, the video cost, 100% write-off.
Your website, your website where you have your portfolio.
Your website,
I talked about casting websites on my videos. Those cost money. Like there's like a subscription that you have to pay. Things like that. And then I want to go back to like the same like kind of like tricky question that I told you about, like the traveling with like influencer work. So again, most models are influencers at the same time, or they're trying to be, trying to be a following, just because other clients want to hire models that have a big following. It's like it's a thing now.
Right.
So we do that. We work on social media and we are content creators. I mean, I am. So for example, I want to create on YouTube a try on haul. So that means that I want to show my audience different outfits that I bought from a store that I like for like, my fall try on haul. So all the things that I bought for outfits for the fall, and I created a video with that. Can I write off all of those outfits that I bought for that video?
Ooh, that's a tricky question.
Because those outfits that I did on that one video, also I'm going to wear them for my TikToks and my Reels. And I'm going to take my camera and I'm going to go around New York City and take photos on those outfits and post it on my Instagram. So I'm doing a lot with those outfits. Can I write all of those off?
Okay, so let's think about it. So the IRS defines a business expense for clothes, specifically talking about clothes. It must be ordinary and necessary for your business, right? So anything. Let's say what's included, what's not included. So what's not included as a business expense for clothes would be something that has to do with personal, family, or life. Like anything that has to do with your personal life, family, or when I say life, I mean like your basic necessities. Okay.
Yeah.
Just thinking on the other side of the table, if we're talking to an IRS auditor right they may push back as those specific clothes necessary, ordinary and necessary, for you to be an influencer in those specific posts. Yeah, that's a tough one. I would say clothes for photo shoots or portfolio, yes, 100%.
Yeah.
As an influencer, again, this goes into the whole new realm of a profession.
Yeah. But I mean, I need it. I cannot be using the same outfit on my videos and on my TikToks and on my photos, like I need new outfits. So I need to buy, it's essential. So what, like this CPA from like Ryan Pineda that I tell you about is that he explains it like as long as you can explain it well why you needed it.
Got to explain it. Yep.
You can write it off.
Yep. And going back to you are the captain of your ship. You are the owner of your tax return. You are signing off. Yes, it's a tax professionals helping you and, trying to find the best way and creative ways to, reduce your taxable income. But at the end of the day, you're signing off on the tax return, right? You're saying it's okay. So with that said, I would say go for it. But don't get too aggressive.
Yeah, no, for real. Yeah.
Don't, like if, for example, if you're buying a $5,000 Dolce & Gabbana outfit, when you only make $50,000 a year as an influencer, that's like 10% of your income.
Yeah,
I'd be careful. Yeah. They may come after you, and I'm not sure if they'll say like,
it's fine.
Is that really reasonable?
Yeah. No, for real. Yeah, no, I understand. Like, you still have to be smart about it, but as long as you have a great explanation of why you need outfits, because you're an influencer and you're showing people how to dress, and that's your content, and
have evidence of that. Don't just buy a bunch of clothes and half of it is used, and at the end of the year you put all of the expenses of your clothes as a write-off, because you need to have a receipt. Again, going back to the whole receipt, you need a receipt for everything: your meals, your travel, your car expenses that we talked about, your home office, everything, your internet bill. You need to keep copies of all your receipts and invoices. So when you say clothes, you need to have itemized
and proof that you actually used it for your videos and your photos and your content, which
you have to.
Yeah.
I
was just gonna say
go ahead.
I was gonna say that it's great if you are doing that, like if you're buying clothes for your content, because it's already documented. Like you already have it on video. You can it's out there. Like it's proof enough, right? That you already have it on video and your photo is there.
I would just make sure you have to be generating income. You have to be providing a service, right? So if you think about influencer as a job, right? They're providing a service.
Yes.
Right? Being an entertainer, as you could say.
Yeah.
So if my TikTok following has 10 people and 8 of them are family members and I'm trying to write off my clothes, it's probably not going to fly.
Okay.
I just want to put that out there.
Yeah.
You have to prove to the IRS that you are a legitimate influencer making legitimate income.
Okay.
Yeah.
Got it. Okay. So now that you're talking about, receipts and documentation and things like that, I also want to touch on what are the best ways to organize your expenses. I personally use QuickBooks. I don't know if there's another way, but I like it because it links to my credit card. So every time I use my credit card, it goes into my QuickBooks and I can just organize where it goes depending on the expense. Yep. So what do you think about that type of organization in terms of expenses, or do you have other ideas, or people that are just starting off, they don't have that much income yet, maybe something else that might not be as expensive? Sure. What are your thoughts?
Sure. So if you come to mind, first of all, receipts. Make sure you have your receipts. Okay, make sure you have them documented. Now receipts are not bookkeeping. What you're talking about right now, you're talking about bookkeeping. So
Okay.
receipts are not bookkeeping. They're just supporting documents to what you've already, to the financial realm of bookkeeping, right? So
Okay.
it's receipts are proven to be audit protection. Bookkeeping, QuickBooks is fantastic. It's very user friendly. It's very easy, as you said. It links, very straightforward software. So if you can afford it, go for it. If you can't, or if you don't want to, you want to save some money, or you're just starting out, I think Excel is great. Having a spreadsheet, just make sure it's nicely organized. I would say, like, for example, make sure you have the date of, as a column of your expense, a description of the expense, the amount, and try to categorize it as, like, for example, we just went through a few buckets. I call them buckets. So like travel, meals, supplies and materials, have them somewhat categorized. So at the end of the year, when whoever's doing your tax return, they can probably see the breakdown of, what products or what buckets to go on your tax return. What can and can't be a tax write-off. It just makes it easier at the end of the year.
Yeah.
So these is like just proper small business entrepreneurs, just 101, like the foundation, just setting the
organization.
Yep. And you mentioned credit cards, the linkage. QuickBooks is great. When it comes to organizing your finances, for your business or to being a model, I always recommend having a specific dedicated credit card or business account or debit card only for your business expenses. Don't try to mix it up. Okay. You'll get lost, especially if you're not being on top of it. You're just getting busy, photo shoot after photo shoot after photo shoot. Maybe you only sit down once a month to do all, go over, your bookkeeping, your organization. And you can get lost and, with your personal and business expenses, they're all in the same card. So that's something I highly recommend, is splitting the two.
Okay.
Especially if you're a sole proprietor, you're just starting out. You can have a personal credit card. As long as it's dedicated to your business expenses. Yeah. Right.
Okay. Yeah. So let's say I have 2 credit cards, one Bank of America and one PNC. So my PNC one, I'm going to use it only for my business expense, even though it's a personal credit card, just for my business expenses. And the Bank of America one is going to be my personal one. So that way, when it goes to QuickBooks, I know that I only pay attention to my PNC one and it doesn't get mixed up when I bought something for my personal life versus when I bought something for my business.
Absolutely. Yeah. Yep. And I know sometimes your mind may be slipping, or maybe you've been, partying, have a good time at night, and whoops, I accidentally used my business credit card. Crap. Just be mindful of that. I don't try not to do it too much, too frequently. Obviously you want to try to differentiate too. But if you do that, just keep track of what personal expenses you put on the business credit card, and vice versa. What should be a business expense. Again, that goes back to the bookkeeping part. Just making sure you're on top of that. I think that's very, very important.
Got it.
And lastly, just to end on organization, is scheduling. So I'm going to ask you, how do you properly schedule, let's say, the next week or your month?
I mean, it's like what I'm doing for work. It's really hard as a model. You literally never know when you're working. So I could be like, next week, it's like, let's say, empty the entire week. And as days go, like Monday hits and I get booked for Wednesday, and then Friday, and then Tuesday hits and I'm booked Friday. And then in the middle of it, I get a random casting. So like, that's the hard part of being a model. Like you can see your schedule and it's like, you have it organized and you think that you have time to meet up with a friend, to have coffee, to go to like a park or something. And right before you do that, you get booked for something. You have to fly somewhere. You have to go to a casting. You have, so yeah, it's hard. We can't do that, unfortunately. We can't do scheduling.
Got it. Well, if that's the case, just try to keep notes as best as you can
Okay.
for scheduling. Like for me, what I personally use is my calendar app that's on my iPhone. Even if something already happened and it wasn't on my calendar, I would go back, make sure I put it in. So for example, right now we're having this podcast on November 20th at this time, and I'll go ahead and put it in my calendar because, and the reason why I say that is just for track record. Okay. Just try to remember where you were at what time and what you were doing business related, right?
Okay.
Because the IRS, they typically audit 2, 3, or 4 years from now. They don't audit like right away. And they're not going to audit your current tax return. They're going to go back to the last couple of years.
So what's the farthest back they usually go?
Typically they would go back 3 years, but they can go back up to 6 years. Yeah. Okay. Yeah. Okay. So start keeping track of your stuff.
I mean, I do, but at the same time, I'm going to say, nobody feels super terrible here. I'm not the best at like organization and bookkeeping and stuff. And after a conversation, I really want to start being more, detailed with everything. But now we're talking the subject of like being audited by the IRS. How common is that, and who do they usually like target when they're auditing? Because there was a TikTok I watched from this supermodel, Coco Rocha, and she said on her TikTok that it was very common for models to get audited. So I don't know if you, from your experience and what you know, like generally speaking, obviously I'm assuming there's always exceptions. Like who are the people they usually audit? Like there's like an income level or like expenses, or like what it is that triggers the IRS to like audit you?
Okay. That's a good question. Yeah. So there's no specific profession that really gets audited more than one or the other.
Okay.
At least not that I'm aware of. Okay. Now you're the person you saw, the model, she may be right.
Okay.
I would say it's more so just entrepreneurs in general. So trying to break it down, a few things that IRS looks at, what triggers. Let's focus on triggers. Yeah. So if you make a lot of money.
Okay.
A lot of money. What's the definition of a lot of money? I'm talking about, I would say 400,000 plus.
Oh, okay.
You're likely to get pulled more frequently than someone who makes under 400K. 400,000.
Yeah, no, I'm saying like it's more common if you're making more than 400. Like let's say you're making 40,000, then it's not as common.
Not as common. Still, you still have a chance.
Okay.
So typically it's 1 in 250 people that get audited. It's which is like less than 1%, maybe even less than that.
Okay.
Like 0.5%. Yeah. So the chances of you getting audited are very, very low.
But never zero.
Never zero. You have to be ready, right? Okay. It's all about being, that's why I say everything we talked about, receipts, organization, it's just about being ready, being prepared. Using cloud-based solutions like Google Drive to make sure, in case you lose your phone or your MacBook or whatever you're using, everything's saved in the cloud, and just store it up there at the end of the year and then just forget about it. And then in case the IRS comes knocking, you can open that folder and boom, everything's there. But going back to the triggers, if you make a lot of money, you get pulled more frequently. If there's errors in your tax return, for most people that like prepare their own taxes, if there's a lot of errors or mess ups within the tax return, they'll flag it for you for a review. We talked about just being an entrepreneur, being a 1099. That's already more riskier than being an employee.
Okay.
But don't discourage it. It's just about being audit ready. Again, just because you're being audited doesn't mean that you're in trouble.
Yeah.
They just want to double check that everything you're saying is true.
Okay.
If you lose money consistently year over year, there's something called the hobby rule that the IRS takes very close attention for entrepreneurs.
Okay.
So if you lose money year over year, you see like a loss,
Mm-hmm.
like, and a loss is pretty much when your expenses are higher than your income.
Mm-hmm.
Okay.
Okay.
So if you have a loss in 2020, loss in 2021, loss in 2022, at that point, 3 years in a row, irises could be scratching their head like,
What's going
I don't
on?
know. Yeah, are you really an entrepreneur,
Mm-hmm.
or is this simply a hobby?
Okay.
And
Okay, I see. Because hobbies
yeah,
don't, you're not making money from a hobby.
exactly.
So all you're
Yeah.
doing is stacking up expenses and writing them
Yep.
off and
Correct.
not
You are
paying
absolutely,
taxes.
yep. Yep. So because IRS wants their fair share, right? They
Yeah.
want you to pay taxes. So
Mm-hmm.
it's just not about, and they look at it very closely as the hobby level, because they consider that, is this really for pleasure, or is this really for a business, right?
Mm-hmm.
Like, are you really an entrepreneur?
Okay.
And sometimes it's legitimate.
Mm-hmm.
Uh, Let me toss it back to you. When you first started modeling, your first 3 years, let's say, did you make a profit or did you make a loss?
I did make profit, but also
Okay.
because I wasn't like spending a lot of money,
Yeah.
you know,
Okay.
I felt like I couldn't make a lot of
Hmm.
expenses, so I wasn't. So I still made a profit, but I can see how uh, I could have spent more money and made a loss, you
Yeah.
know, on the first. Like
Yeah.
I can see what you're saying. So yeah. So in that case, what you're saying is that I was just starting out. I wasn't making that much money. I was trying to invest in my business. So I was, you know, paying for like cameras and things like that. And then at the end of the year, 3 years in a row, for example, it was a
Hmm.
loss. But it's just
Yeah.
because I was building my business. But
Yep.
then, let's say I get audited, I can explain everything,
Yeah.
and
As long as you can explain. Yep.
I'll be fine. I would have been fine.
Yeah.
Yeah. Okay.
And they're going to ask for receipts. They're going to question what you were doing with this, what were you doing with that, and if you're a vlogger or influencer, you know, TikTok, Facebook, Instagram, all that stuff, you know,
Yeah.
that you can go back and record and show it to them. You know, you can show receipts, documentations, your schedules, your bookkeeping, like all those details to prove that you were actually trying to make it. You know, models are trying to make it. You know, entrepreneurs in general are trying to make it.
Yeah.
I'm trying to make it. You know, it's very important to know that it's okay to incur a loss when you're starting out.
Okay.
Okay. So don't feel discouraged. Like, oh, I don't know if I want to write this off because that might push me right under the loss.
Yeah.
And I don't want to get audited.
Uh-huh.
It's very common for, you know, your first few years to be,
Negative.
yes. As long as you can explain and have supporting documents again to prove that. But eventually you got to turn that switch, right? You got to make a profit. So
Yeah.
that's something that's a trigger for an audit.
Okay. So like my only, I guess, question from that is like, when you're talking about income, like most people that make over $400,000 a year are more common to get audited. Does that go with the same entrepreneurship, or it's, well, now that you're talking about loss, I guess no, but like, you know, like it's more common if you're an entrepreneur that are making $400,000 or more it's more common for you to get audited, or just you being an entrepreneur, you're just commonly audited because you're an entrepreneur.
Your chances go up.
Just because you're an entrepreneur.
Yeah.
Even though your income is, let's say you're making $40,000 a year, you're an entrepreneur. Yeah. Because you're an entrepreneur, does that make it more common? Or because you're not making that much money, it's not going to be that common for you to get audited?
You have a less chance to get picked to get audited.
Because of the income.
Because of the income, yeah.
Okay.
So using your example, if we have one entrepreneur making 400K and a second entrepreneur making 40K, the first one who makes 400K could have a 5% chance of being audited, and the one who makes 40K could have a 2% or 1% chance of being audited.
Okay.
So their chances go down.
Okay.
But you're still above you would still be above the normal W-2 employee, for example.
Because you're an entrepreneur.
Correct.
Got it. Okay. All right. So the last question that I want to ask you is, what would you recommend for you to do your own taxes? I feel like the question kind of already got answered when you said like errors happen when people do their own taxes, but
yeah,
that you do your own. Let's say you're very smart and you know about this stuff, but like say, but you're not that knowledgeable in taxes, obviously. Like let's say me, you do your own taxes or you pay someone to do taxes for you. Like what would you recommend? And also, I'm assuming if you do pay someone to do your taxes for you, that's a tax write-off.
Yeah, it is.
Okay. So.
Yeah, it's a professional expense as a tax write-off. So, your question is, what's the benefits of you doing your own taxes versus a professional? Okay. So, when you talk about doing your own taxes, what's the first thing that comes to mind?
TurboTax? Or what?
Yeah.
I was like...
TurboTax.
Yeah.
So let's just touch on TurboTax. So what are the pros of TurboTax? The pros are that it's very user-friendly. You can quickly import. It seems pretty straightforward, all the questions that they ask, and it's cheaper.
Okay.
What are the cons for TurboTax? This is the thing that a lot of people, they get cocky. They're like, oh, I'm confident I can do my own taxes. How often do you do taxes if you're doing self-preparation? You're doing it once a year. And not only are you doing it once a year, how many tax returns are you doing?
One.
Just one.
Yeah.
You may help your mom out, but that's like, yeah. Most of the time, you're just doing your own tax return. You do it once a year. There could be tax deductions, credits that you are, they're going over your head, that you're just clicking no on the questionnaire in TurboTax, when they actually could be applicable, and they could reduce your taxable income, and you could pay less in taxes. Versus a tax professional who is actually, engulfed in this world. They study this day in and day out. They're involved. This is a profession. For example, me, I'm a CPA. Like I took exams over exams to really gain the knowledge for this stuff. So that's the benefit of going to a professional, is that they can really help you utilize any tax write-offs or credits, deductions that you didn't even think about. And another con of TurboTax is overusing. So the opposite of what I just said. So you think that tax deductions and credits are applicable to you when they're really not. And we just talked about audits. And what happens when you have an error in your audit? In your tax return?
Yeah.
Yeah, you're likely to get picked to be audited. So
it makes sense to hire someone who knows what they're doing.
Yeah.
And
if
also you can write it off. So
yeah. Professional services you can write off for taxes. If you have a simple W-2 or you're a contractor, you're just starting out as a model, you have minimal activity, you don't have too much income, too much going on, or too much expenses, I would say go for TurboTax. But if you're already in the grind, you have complex returns, you're investing in the stock market, Bitcoin, you have this going on. You're traveling all over, you're going to LA, New York, Miami to do all these photo shoots, Ohio. You have all these expenses being incurred. You might want to consult with a tax professional to make sure the proper strategies are in place and the proper tax write-offs are being used to get you where you need to be.
Perfect. So this was a great episode. Just want to finish off asking you, like, where can people find you? Because you can help anyone in the US, right? Or do they have to be anyone? Like they can be in New York, they can be in LA. You can help
That's
them.
Correct. Yeah.
Okay, great.
Yep.
So where can people find you if they want to get in touch with you, if they need help or, anything like that?
Yeah, no. So I am based out of Maryland. And my home office is in Gaithersburg, Maryland. So I'm taking in-person visits, but at the same time, like you said, I could help out anyone anywhere because I'm also a virtual firm. You could find me at My email is kevin@sparktaxservices.com, or you can find me on Instagram at Kevin CPA.
Okay, great. I'm going to put it in the description box so people can find it. But thank you so much, Kevin, for sharing your knowledge on this. It was so exciting. I really hope this helps new models or even career models as myself, learn about taxes and write-offs and the organization of your company and, not be so scared about the IRS auding you, as long as you know what you're doing and you're like organized and you have professional help as yourself. So thank you so much for being on, and thank you everybody for listening to this episode, and I'll talk to you guys next time. Bye.
Bye. Take care.